where we dive deep into the world of cryptocurrencies and blockchain technology. Today we're discussing one of the most intriguing topics in the crypto space: Bitcoin's potential to soar by another $1 trillion in market cap. This isn't financial advice, but an exploration of Bitcoin's intrinsic value and future potential, as highlighted by Bill Miller IV, Chief Investment Officer of Miller Value Partners. When it comes to cryptocurrencies, the conventional wisdom is that they are highly risky and speculative investments. Popular cryptocurrencies like Bitcoin achieve high valuations primarily due to investor perceptions of their enormous future growth potential. This makes them comparable to growth stocks rather than value stocks. But what if we think outside the box? Bill Miller IV believes that Bitcoin can also be analyzed as a value stock. Based on the intrinsic value that Miller sees in Bitcoin, he thinks it could be worth many times more than its current market value of $1.3 trillion. Let's unpack this intriguing perspective. Bitcoin for value investors. First, it's essential to understand that there are no traditional fundamentals by which to value Bitcoin. There are no benchmarks or metrics like price to earnings, PE ratios for comparison. Moreover, Bitcoin hardly seems like a cheap, undervalued investment. With its lofty $65,000 price tag and trading near an all-time high, Bitcoin looks more like a growth stock than a value stock. However, Miller sees it differently. In a recent research note, Miller outlined why he's still bullish on Bitcoin. From his perspective, Bitcoin is a value investment and appears to be considerably undervalued relative to its future potential. Why Bitcoin is a superior monetary technology. Miller highlights several reasons why Bitcoin is a superior monetary technology. 1. Inflation resistance, thanks to an algorithm that carefully controls the rate of new Bitcoin creation and its total lifetime supply. Bitcoin is resistant to inflation. 2. Decentralization. Bitcoin's decentralized nature means no monetary authority or government can ever control it. 3. Lower transaction costs. The peer-to-peer nature of Bitcoin's monetary technology should lead to lower overall transaction costs compared to monetary systems that require a financial intermediary. Miller isn't new to Bitcoin. Since 2015, he and his father, Bill Miller, have argued for Bitcoin's potential as a value investment. At that time, Bitcoin's market cap was just $3.4 billion, and they estimated a 97.25% chance of failure. However, they also noted that if Bitcoin succeeded, it could be worth significantly more. Today, Bitcoin has proven its worth, now valued at over $1 trillion. It's still early. For Bitcoin to increase in value by another $1 trillion or more, several things need to happen. According to Miller, Bitcoin will need to be used more for payments. Most people today hold Bitcoin as an asset rather than using it for transactions, but Bitcoin was initially designed for peer-to-peer payments. Currently, Bitcoin accounts for less than 1% of the world's addressable market for capital. Bitcoin also needs to establish itself as an alternative to gold. Traditionally, investors turn to gold as a hedge against inflation or geopolitical uncertainty. However, Bitcoin's share of the store of value market is growing. For example, in 2022, Goldman Sachs suggested that Bitcoin might eventually account for 50% of this market. How much is Bitcoin really worth? Miller argues that the best monetary technology usually wins, and Bitcoin represents an impressive technological breakthrough. Just as plastic money replaced paper money, digital money could replace analog money. If this happens, Bitcoin's value could easily double, triple, or even quadruple. Although Miller did not provide an exact target, he suggested that Bitcoin's value could be many multiples of its current price. While there's a lot of risk involved in cryptocurrencies, and much of Bitcoin's growth could take years or even decades to fully realize, the potential rewards are significant. According to Miller, investing in Bitcoin requires not just a leap of faith, but also a fundamental shift in how we think about money, capital, and the role of governments. Bitcoin's journey is far from over, and its potential for growth is immense. While it carries significant risks, the technological advancements and properties of Bitcoin position it as a revolutionary monetary technology. As Miller suggests, it's still early, and those who understand Bitcoin's intrinsic value might find substantial opportunities for growth. Thank you for watching. Make sure to like, subscribe, and hit the notification bell to stay updated with the latest insights and analyses in the cryptocurrency world. Leave your thoughts in the comments below.